welcome back to the channel. On today's video, we're going to be talking about Granite REIT. This is in a very hot sector as it's in the industrial real estate investment trust sector. There's been a lot of chit-chat about how retail REITs are doing very poorly, office REITs are doing very poorly, but you know who's not? Industrial. They've been thriving in 2020, 2021, and we're going to go into why this is a great hold for your portfolio. Now, for those of you who have never heard of Granite before, I just want to go over quickly who they are and what they do. So basically, they're a spin-off of Magna International. Magna International, which you've probably heard of, is a car manufacturing company, and they do contract work. They don't only manufacture one company, like they don't only make Toyotas, they do Ford, they'll do GM. Whoever pays them, they're going to build that car in their warehouse. But Magna International wanted to focus on the car manufacturing side of the business and did not want to deal with logistics of all their warehouses. So what they did was they spun off all their real estate into a separate holding, and now that's why we have Granite Real Estate Investment Trust. So Granite owns all the warehouses around the world. They are definitely very well diversified all over the world, by the way, guys. That's a big strong point on why you should have them. But they own and operate all of the warehouses and they rent them. They have leases with a bunch of different companies. A major one of the companies they have leases for is, you guessed it, Magna. So they trade under the ticker GRT.UN on the TSX. They currently have around a $5 billion market cap, which is fair sized, and they have a dividend yield of 3.5%. So that's kind of in the middle range. I mean, you're going to definitely get a lot higher yields on retail REITs and even some office REITs, but we're going to go over why this is still a very compelling hold. Taking a look at their 2020 annual report, we'll see here that they had 100% rent collection. Now, if you compare this with other REITs in the retail or office space, you'll notice a lot of them are below 90%. So if you're getting 100% of the rent, it's going to lead to very good things, and it did. It led to a distribution increase. In fact, they've increased their distributions 9 years in a row. So this is absolutely fantastic for people who need to live off the income. The only negative thing I would say is they did dilute shareholders by issuing more shares. However, the stock price went up significantly throughout the year anyway, so this is a win-win in my opinion. Now, criticism of Granite in the past is that they're too heavily reliant on Magna International still to rent their warehouses. So management's actually listening and they're taking an active approach to reduce their percentage, okay? So what they did last year was reduce the percentage from 35% to 27% of their business comes from Magna now. This is trending in the right direction, and it just shows that management cares and is listening to shareholder concerns. Now, I just want to put in perspective how well Granite's done versus the market and just in general. So let's take a look on this graph here. Since 2012, Granite's went up over 280%. So that's very good, I would say. And let's compare that to the market, okay? The overall TSX market in the dark blue here has went up just under 95%, and we'll compare it to the REIT index, okay? That's the light blue line here, and that's went up only 70%. So this is a huge outperform. Now, that was a pretty big time span from 2012 to 2021. So let's take a look at the 1-year return. So Granite's boosting a 23% return in 2020. And if we compare that to the TSX capped REIT index in the dark blue here, they're negative 13%, it looks like. And the TSX on its own is only up about 5.3%. So there's a big outperform in the short term and on the long term. Now, talking about the capped REIT index here with the negative return, you know, a lot of office REITs did very poorly, and so did retail. So take it with a grain of salt. It's not always going to be like this, but in any event, there's a huge outperform, guys. It's been a great hold. And as a side note, Granite's been greenifying their portfolio by putting solar panels on the rooftops and just getting a couple of their industrial buildings green certification. This is kind of cool. It's on trend and it's better for the environment. So I like that. I'm just going to give them a little shout out for doing the right thing on that. Overall, guys, I think Granite's a great hold. If you don't have any exposure to the industrial side of REITs, this is a great one to pick up. You should at least consider it for all the reasons I've pointed out today. It's been great in the past. It should be great in the future. The 9 years of consecutive distribution increases, increasing AFFO, FFO, management's listening to shareholder concerns. I'm pretty positive on this company. I hope you guys enjoyed this video. Let me know if you hold it or are thinking of buying it. I've held it in the past. I had to sell it for another opportunity, and I feel bad about it. I kind of want to buy it again. It's on my radar. I'm going to wait. If it dips in the low 80s, I will pick it up again. But yeah, let me know if you liked the video. Like and subscribe, guys. Have a great one.